We spend lakhs and even crores in buying our dream home, but when it comes to making sure it remains safe in our hands, we really don't bother much. In fact, a recent collapse of a building in South Delhi, which developed cracks after the Nepal earthquake, is a strong reminder to all of us to look at ensuring our homes adequately. What is available in the market and how do these policies work? Joining me today, Harshvardhan Rungta, CFP Rungta Securities. Harshvardhan, first of all, season's greetings. Happy Deepavali.
Wishing you the same, Manisha.
Thank you. So let's quickly run through it. I mean, you're the expert here. What can we do to secure our dream home?
Well, Manisha, when you talk about buying a home, there are lots of dreams associated with it. You just mentioned that there is, there is an incident already we know about in Delhi which developed a crack. Now, God forbid, if a similar situation was to occur to a person, to an individual's home or a house that he's purchased out of, either securing a loan or out of his own money, well, there are certain things that he needs to take care of. Now, let's begin with, elements. There are two primary elements that you need to take care of. You need to protect your home in the first place and the home loan also. Now, what do I mean by that is, let's look at a subject called home loan. You've borrowed money, you've purchased a house, and everything goes well, you're going to pay the EMIs towards it, and at the end of the loan period, you're going to be owning the property. Now, what happens in between? There is a possibility that there could be loss of job, there could be loss of life, the borrower may not be alive himself, or there could be disability, a physical disability of the owner of the property. Right. Now, in each of these three cases, there is going to be a loss of income, there is going to be disruption in the EMIs. So how do you take care of it? So that is the first element that you need to make sure, because in case the EMIs are not paid on time, you will see that the lender is actually going to take possession of your house, sell it, and recover his money. Now, when we talk about loss of job, there isn't really any kind of cover or a protection that we talk about, or life or any kind of insurance cover which is available, which is the unemployment insurance yet in India. However, if you talk about demise of the borrower, the death of the borrower, so EMIs still need to be paid. The EMI burden would ideally be shifted onto the dependents. Well, in such a case, there is a it's a no-brainer. You need to buy life insurance. Now, life insurance you need to buy at least equivalent to the loan amount that you have.
Okay.
So in case of demise, the loan amount can be repaid from the insurance proceeds. Now, there are two kinds of policies that are available in life insurance for protecting a house. One is a term plan or pure life cover, a level sum insured. So basically, if death occurs in the next 20 years of the policy, a total sum insured is paid out to the family. Family can repay that, use that money to repay the loan amount. And if there is any excess, they can keep it for their expenses. The other one is a loan protection, a home loan protection cover. Now, this is also a term plan with only one variation. It only says that every year the loan amount is going to reduce because you're going to pay some amount, some principal amount every year. So the loan cover policy also reduces the sum insured in the same proportion as your loan amount outstanding is getting reduced. So both are similar. If you ask from a practical standpoint, I would suggest that you should buy a level term policy. You buy an online term plan, and take a standard cover. When the policy is issued to you, you can assign that policy to the lender, and the lender is also secured in that form with respect to your life, with respect to the loan outstanding.
So what you're saying is, Harshvardhan, what you're saying is that a pure term insurance plan is also the cheapest in terms of premium, isn't it? And you can cover your loan, you can also cover, go with your little formula of certain X of your annual income and protect your family. Then why go for home loan protection plan at all, is my question. Why even?
Absolutely, Manisha. Now the methodology to determine what is the sum insured that you should take. So there are two elements again. The first is that your family needs to be taken care of for their daily expenses. So that part is one element. The other element is, besides your daily expenses requirements, there is an outstanding, there's a loan that you have. So now you need to cover both of these. In case of demise, the first element would be that you take at least that much cover that helps your family meet their day-to-day expenses. So that could be 10 or 15 times of your income. Now, over and above that, you need to take a cover which is equivalent to your loan amount, because in case of demise, the entire money comes back. One portion gets paid towards the repayment of your housing loan, right, and the other portion remains back with the family, which can be used for their day-to-day expenses.
All right. So now let's come to the crack story, where you have a structural damage. Quickly, if you can sum up, what is it that we should look at in terms of policy to cover, and if there are any exclusions or things that we should be watchful of?
So you need to also insure your property, the flat, the house that you own or an apartment that you have. Now this needs to be insured. So this is typically insured by general insurance companies who protect and cover the property. Now if you bought a 1,000 square foot property and and it may have cost you, market price could have been whatever X amount. What the insurance companies cover and provide you or rather indemnify you is for the reconstruction cost. How much does it cost to rebuild that 1,000 square foot apartment, which is the construction cost? So it could be possibly 1,700 rupees, it could be even 2,500 rupees, depending on the city, depending on the locality. So this is technically the real cover that you need to take for your property.
Anything that we have to be careful about when you're looking at the general insurance or taking a policy for the structure of your house?
Well, see, most importantly, you may have to make sure that you insure it for the right amount. You might want to insure it for the market value, which includes the cost of the land. So in case of fire or earthquake, nothing really happens to the land. So the insurance amount has to be very specifically only to the reconstruction cost, so your premiums get restricted.
All right, Harshvardhan, thank you very much. I think you've really spoken or clarified on why we need at least the first two, which are very, very critical if you have or do have a home. Thanks so much for joining us today.
My pleasure.